Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the Vietnam War. The government has been getting bigger. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about a possible rally that we could be seeing coming very soon on Bitcoin, and we're also going to be talking about the CPI drop that happened this morning. As you will know, we had CPI for all items come in this morning, and that has sent shockwaves around the cryptocurrency space, and it's really sent shockwaves around the entire market. And today we're going to be talking about why this is such an important development. We actually saw CPI all items rise by 0.3% in September, and gasoline went up as well. As you can see, inflation is still running hot here at 3% on all items. And when you see all items less food and energy, these have actually come into parallel at 3% as well. This is extremely important because, as we've talked about, our entire analysis of next year is based upon Federal Reserve policy. We're going to be talking about how the Fed is going to react to this new data. They've had a dearth of data over the last 30 days as a result of the government shutdown, so BLS has not been able to get them all of the data that they're used to. So today we're going to be talking about how this impact is likely going to alter the course of events in 2026. What are we looking at happening in 2026, and how should we be positioning ourselves on the investment side right now in preparation for that? Should we be preparing for a bear market? Should we be preparing for a bull market? Should we be putting more energy into one or the other of those preparations? And also, we're going to be looking at the chart today to see if we can find any trade setups on Bitcoin or any altcoins that you guys might find interesting. Not sure if we're going to. Bitcoin's in a lot of chop lately, but I think we might be able to find some pretty cool trade setups. So let's go ahead and dive right on into it. If you are new here, my name is Jeb McAfee. I've been helping people learn how to invest, trade, profit, and change their life in the Bitcoin and cryptocurrency space for almost a decade now. Back in 2017, when I got into crypto, I told everybody around me, I said, and at the time, Bitcoin was at $5,000 a coin. I just found it was at $3,000 when I found it a couple months later. I'm telling everybody, look, Bitcoin's the future. Bitcoin's the future. I just turned 17 years old. I'm making $8.25 at the bookstore. Nobody ought to listen to stupid old me. But I was telling everybody, Bitcoin's the future. And in 10 years, I am going to have a platform, and I'm going to teach the world how to use Bitcoin, because Bitcoin's going to be mainstream in 10 years. And when it is, I'm going to be this guy that's been here for 10 years to teach you how to use it, because I've been here for a while, and that was 8 years ago. We're coming up on 10 years of Crypto Jeb, and I'm so very thankful for everything that you have done. God, I thank you, Lord. Thank you for being here. I really appreciate you taking time out of your schedule to join us here on the stream and join us here with our analysis. I give you my word, I will do everything I can to make your valuable time, spend your valuable time here on stream the best I possibly can. Let's make sure everything's set up over here on my other monitor. Looks like we're good. Let's read a little bit of chat and we'll dive right on into the charts. Sean O'Brien said, right bloody now. Kryptoni said, LFGGGGGG. GG to you too. Renee Heredia is here. Said, buenos dias, ¿cómo está? Hawaii is in chat, said aloha. We have the whole island. We have the whole big island here. Not the whole, sorry, the whole island chain, actually. The big island's what, Oahu? No, we got the whole island chain here. Aloha to you as well. Coin Operators in chat. We got Dwarf in chat. Yay in chat. Vintage Excellence. Juan Hernandez is in chat. Cole Hebert is in chat. Cyberhawk. David Trehan is in chat. Good to see you, man. You've been around for a long time. Hey, Jeb, God bless you and your family, brother. Thank you so much. God bless you as well. Let's see if I can fix my face cam here a little bit, shall we? I look a little bit out of place. There we go. That's a little bit better. There we go. We're all Jeb. There you go. We are all Jeb. SMC's in chat said, good morning. Good morning to you as well, SMC. Do you guys know that SMC was one of our first subscribers? He's been around for, I don't know, you might say he's been around for a while. You might say that. Big shout out to him. I would not be here without him. All honor to him. Thank you so much to that guy. Everybody give a heart in chat to SMC. Gentle Traveler's Music is in chat. Kryptoni, Raphael L is in chat. Alex Kaimana. Let's get started. We got a lot to cover. Let's do this. I'm number one. Shout out to you. What's up? All right, let's get started. We're going to start over on CoinMarketCap right now, give a quick rundown of what Bitcoin has been doing lately. Bitcoin is currently trading at $110,600. Yesterday, we talked about how Bitcoin was possibly seeing a bit of a bullish reversal. And a big part of the reason for that was because we were witnessing an Elliott wave 1, 2, 3, 4, 5 correction turn into an ABC, Elliott wave 1, 2, 3, 4, 5 impulse turn into an ABC correction here. We even pulled our Fibonacci off of the top of the 5 wave to the A wave. You can see that the B wave perfectly corrected as Elliott wave theory would predict down to the 0.618. We then bounced off of that. And then yesterday we were looking at the chart right around here. We were right here, and we talked about how this would have been a really solid trade entry if we had gotten an entry right there around 108,708. Now, part of the issue is Bitcoin is trending up here, but as you can see, it's actually fallen over. So now we need to see if Bitcoin is going to be able to break through this Fibonacci. See this at 111,375. We have our Fibonacci drawn all the way up here to 114. We have a Fibonacci here. This is the 0.236 here at 111,375. Bitcoin is stopping out right here. We had a break of structure on the Lux Algo Smart Money Concepts indicator. Unfortunately, that did not actually come to fruition. Instead, what Bitcoin has done is it set a large candle here as a liquidity grab, dropped back below this uptrend, and so we could be looking at short term, i.e., the next 4 to 8 hours, some corrective movement. But if Bitcoin is able to hold here above the 0.618, which is roughly at $107,360, then Bitcoin would likely have a bounce. Now, the reason that I say that is because typically when you see an Elliott wave 1, 2, 3, 4, 5 pattern, you see the A wave is completely formed, the B wave backtest the 0.618, then you bounce off of the 0.618, then that gives you an entry position right here, and you would oftentimes pull your stop loss just a hair below either 0.786 right there, or even just a hair below like a level like this. Generally speaking, you want to put it right below the 0.786 because that would be considered a deep correction, but the market could bottom at 0.786. So we would put our stop loss here, and then we would just kind of go ahead and set our risk to reward here to approximately 4 to 1. So we would just go ahead and extend this up to at least 3 to 1, if not 4 to 1 for temporary, until we got more of a feel for where the market's going to go. As you can see, this would have been a very solid entry here. Again, we caught this just like an hour or two late. We caught this just a little bit too late to be able to get into it because it happened late on Wednesday night. I wish I had seen this. I would have definitely been in a trade right now. And I probably would have taken a little bit of profit off the table here at about 1.5 or to 2 risk factors. Probably would have taken a little bit off the table there. But in theory, what you would do is you would allow this trade to run as much as possible up to somewhere between the top of the bottom of the 4 wave, or the top of the 4 wave and the top of the 1 wave, so somewhere in here. You'd also pull a Fibonacci off of the market like this, and you'd see that the 0.618 on the overall 1, 2, 3, 4, 5 impulse wave is down at 117. And then you can also, another thing you can do is you can come in here with the trend-based fib tool and pull a trend-based fib off of the A wave, and that's going to give you a 1.618, which is sitting up here at 120,000, which also happens to coincide with the 0.786. So you would end up putting your stop loss somewhere kind of in the middle of all of those different levels. Ideally at least 3 to 1 risk to reward ratio. So 3 to 1 risk to reward ratio on that entry would be around 113. That's pretty simple. That's just a retracement to the top of the A wave, maybe even somewhere up here around 4, and then you end up getting a 4 to 1, something like that. So we really appreciate our technical analysis coming in clutch here. Unfortunately, we caught this pattern just a couple of hours too late. And the reason that we caught it a couple of hours too late is because it's too late to enter into the trade, because our risk to reward ratio, now that we've kind of calculated our stop loss and our exit, as you can see, the risk to reward ratio like this, if we got an entry at 107,600, is solid. But if we pull our entry up here to like 108,900, all of a sudden our risk to reward ratio is 2 to 1. That is no longer a valid trade entry, because we always want to see, depending on the strategy you're running, but generally you always want to see at least a 3 to 1 risk to reward ratio. That way, if you have a 50% win rate, you're still going to end up growing an account, because of the fact that you win so much more when you do win than when you lose. And so what I want to do now is, now that we've kind of talked about the overall of how you could have traded this, I want to talk about what we can do to trade it in the short term, because there's actually some stuff going on down here on the minute chart that may prove to be useful. What we saw happen here on the 1 minute chart is actually what is known as an over under test. Let's go here to a clean chart. This is called an over under test. It really shows up best on the 3 minute chart here. If we go and grab a ray tool, what you're going to see is that there's a pretty well-defined trend line right there. I'm just kind of showing you some of the different ways that you would end up going into trades. This is the uptrend based on that longer term C wave impulse up towards 114 to 120, right? But Bitcoin fell over, signifying bullish weakness, which is why we have not thrown out our 94 to 100K price target just yet. We need to see how strong Bitcoin is going to be in this C wave. If Bitcoin is not strong in this C wave, then we're going to have a very hard time. As you can see, we set our pivot point down here. We have our set point right here. And then as you can see, our touches on this uptrend continued to get closer and closer and closer. Bitcoin ran into this flat level of resistance here, and it was in this ascending triangle pattern. And unfortunately, it was not able to break through that ascending triangle pattern. And so what we ended up seeing was Bitcoin fell back below the uptrend, ran up, back tested this, and it would have probably stopped you out if you had entered into a trade right here, which is why you don't enter into the short trade right here. You enter into the short trade right here. It's called an over-under test. You have an uptrend, you fall back below it, you uptrend, you break through it, and then right here, right in this area is when you would probably enter into that trend, that downtrend. So there is a short trade that could have opened right here. Would have been a pretty solid short trade if you had been looking at something like this. If we were looking at this chart right here, this is where just a few minutes ago at 9:20, this would have been a pretty solid short entry because you have the blow off top. This is a liquidity grab, not really indicative of sustained growth to the upside, but instead it's indicative of a rejection and a break of the trend. And of course, as you fast forward here, you see what happened. Bitcoin fell over. Our price target for that is going to be, it's not going to be that difficult to determine. You're just going to pull a Fibonacci off of here, and you're probably going to look for a price target in the short term down around 110 to maybe 109,300 to maybe 108,695. And you can also see, if we zoom out and do a little bit of multi-time frame analysis here, that there is a good bit of support here at approximately 109,300. We have this touch. You have some little bounces and corrections off it right here. You have trading through it right here. You have a bounce right here. So 109,300 is a pretty solid price target, and it also just so happens to line up with the 0.5. So in the next little bit, I'm probably expecting, as far as, and by the next little bit, I mean in the next several hours, I'm most likely looking at a correction on Bitcoin down to about $109,300. That's not something that I'm particularly scared of. The chart will probably print down here, and if we do bounce around 109, this bounce is a place that you could very well look for a trade entry. Because you would be seeing a high probability of reversal. There's a lot of confluences there. At the same time, we might only bottom out at 110 because 110 is now beneath us. 110 is also the 0.386 on this, the 0.382 on this uptrend, Fibonacci retracement. So it is very possible that we are going to see a very small correction down to 110 and then a bounce from there. So that's kind of what I'm looking at down on the shorter term time frames, but I really want to focus today on the longer term time frames because the longer term time frames are where we are going to be doing our investment. If you're a trader, hopefully that was a helpful overview of Bitcoin. We'll probably look at a couple of altcoins later on as well. But in general, the most important thing that we can look at is the long term, because even the point of trading is to be able to generate wealth. And so when we look at the long term, we have to start off with the fundamentals. Now, if you didn't know, there is a tool. I'm going to do something I don't normally do. I'm going to go off of the chart in TradingView. And I'm actually going to show you the rest of the TradingView interface. If you come into TradingView here, I know where it is on the chart. Let's see if we can find it up here. Yes, here we go. If you come up to markets, as you can see, let me just move my screen a little bit. Come up here to markets on the main part of TradingView. Come over to news. Is it news? I think it's news, right? News. You're going to have, where is it? I know where it is in the chart, but I'm trying to show you from the main screen. There is. Okay, so you have your news here, right? You have all this different news that came out. This is useful to know, different stuff. And you can specifically go to news in the crypto space, right? Peter Brandt projects 50% Bitcoin decline if price pattern remains unchanged. Satoshi Nakamoto statue restored 2 months after its destruction. Bitcoin from rare Satoshi era wallet moves after 14 years of dormancy. Yeah, there's some guy with like $400 million worth of Bitcoin that moved. This has been misreported, by the way, as saying that Satoshi moved his coins. He did not. He did not move his coins. That's not what happened at all. But over here, if you come to products, I apologize, that's where it is, under products. Oops, nope, go back. If you come over here to the home screen, go to products, scroll down, you're going to see the calendars. Go to economic calendar, and you're going to see all of the different things that have happened in the past and that have happened today. And as you will see, this morning, we had core inflation rate month over month and core inflation rate year over year, inflation rate month over month, and inflation rate year over year. This has been very interesting because we forecasted 0.3% on core inflation, and we saw 0.2. They forecasted 0.4, and they got 0.3. They forecasted 3.1, they got 3. They forecasted 3.1, they got 3. So we are coming in below forecast, but what we do on the other hand see is that these numbers are kind of right there slowing down compared to last month, right? They're not as high as last month generally. Inflation rate month over month is 0.1% lower than prior. Core inflation rate is 0.1% lower than prior. Core inflation month over month is 0.1% lower than prior. So these are generally good signs because if you extrapolate 0.4 over the course of a year, 0.4 times 12, right? You're getting 4.8. That's not good. That's quite a bit of inflation. If you extrapolate 0.03 month over month, you're getting 3.6, which is a little bit more manageable. It's still high though. And so when you look at bls.gov/CPI, what you're looking at here is that we actually have a good, quite a bit of inflation still going on. We have seen the Fed try to keep interest rates high to be hawkish on the market and slow down inflation, and then that's not exactly what we are seeing happen at all. Instead, we see CPI is sitting up here stuck at 3%. Now, let's just back up and we're going to go over the fundamentals of why this is so important. And this also reminds me about another reason why it's so important that we invest in Bitcoin, and that's because we have to try and avoid what the government is doing to us, right? Inflation, make no mistake, is intentional. It is not a mistake. It is an intentional effort by the United States federal government to steal your wealth through the form of debasement. And so we want to avoid whatever the government does to money as much as we possibly can, to be quite honest with you. And so one of the ways that we're able to do that is by investing in Bitcoin, but another way that we're able to do that is paradoxically through something that the government set up, which are Roth IRAs and traditional IRAs. And so real quick, I want to let you guys know that iTrust Capital has helped to bring you this stream today. If you guys have not already signed up for iTrust Capital, you absolutely should, because this is the absolute best place to invest in Bitcoin and cryptocurrency in a Roth IRA and a traditional IRA. Now, I understand you want to that you might have more investment than what a Roth IRA or traditional IRA can hold. That's okay. Just max out your Roth IRAs and your traditional IRA, whichever one you choose. Get the tax advantages and do it over here on iTrust Capital. It's definitely worth it because you're going to end up giving Uncle Sam less money. I mean, it's really very simple. We don't want to pay Uncle Sam more than we need to because we're already paying him in the form of taxes. We're already paying him in the form of property taxes, inheritance taxes. We're already paying him in the form of sales tax. We're already paying him in the form of inflation. So why in the world would we give money to Uncle Sam if we can avoid it? There's nothing in the law that says you have to pay all the taxes. What it says is that you have to pay taxes unless you can find a legal way not to. And there are plenty of ways legally not to pay taxes. And one of the most obvious ones is a Roth IRA or traditional IRA. So I highly encourage you, if you have not already, sign up for iTrust Capital with the link in the description box down below. Go to itrustcapital.com/crypto-jeb. This is our preferred IRA provider in the cryptocurrency space, and it's what we use to invest in Bitcoin and cryptocurrencies. And we look forward to putting a lot of investment into Bitcoin and cryptocurrency straight into our IRAs as soon as the year clicks over. Very excited to be working with them. So make sure to go ahead and sign up for a Roth and or traditional IRA with iTrust Capital right now. itrustcapital.com/crypto-jeb. That link will be in the description box down below as well. Now, I want to talk a little bit about why CPI is so important. Let's back up. Where does CPI come from? Where does inflation come from? The traditional, let's see, what's the word? Nonsense is that inflation comes from the expansion of the United States economy or from the expansion of the global economy. And so prices go up because you have to have liquidity to basically lubricate the gears of trade. This is complete and utter nonsense. Is exactly what this is. And I actually bought this for a while. Like, oh, okay, of course, yeah, you have to increase the money supply so that you have to increase the money supply so that there's enough liquidity to make the market run. It makes sense, right? I mean, if you want to have 5 boats in a pool, then you only need a little bit of water. If you want to have like 100, then you gotta have more water. It makes sense, right? No, it doesn't make any sense at all, actually. What it does is it completely removes the element of competition. What it does is it causes prices of goods to go up when, because of technological advancements, they ought to be falling. You understand what I'm saying? We've been fed this conventional bullcrap that you need inflation to lubricate an economy. And that is complete and total nonsense. That has never been true at any point throughout human history. That's like saying, if you want your food to taste good, I have to add, depending on the year, between 2 and 3% poison to it. It's the kick, right? It's the spice. It makes you live life on the edge. It's nonsense. It's garbage. Inflation is theft, plain and simply. There is absolutely no way around it. And it is 100% completely and totally driven by two forces. Number one, it's driven by quantitative easing at the Federal Reserve. And number two, it is driven by fractional reserve lending. Or at this point, you just got rid of the fractional and the reserve, so just as much lending as you want from the banking system. I mean, they've gone so far, they stopped even using fractional reserve lending. They can basically lend as much as they want. It's complete and total trash. It's garbage. And so when you see inflation running hot like this, the Fed likes to step in and pretend and virtue signal that they care about the American people and say about how they want to get inflation under control. The Federal Reserve has absolutely no interest in getting inflation under control. The Federal Reserve has an interest in keeping inflation as low as the people will allow it without having a riot in the streets. People were really pissed off about inflation being at 10% on CPI 5 years ago, 3 years ago, 4 years ago during the COVID-19 pandemic. Right now, not really anybody's talking about 3%. They just accept it like a frog in boiling water. Just the same way that we as a nation, as a culture, accepted 2% inflation, we're starting to accept 3% inflation, which is why you're going to see rate cuts, even though you see inflation running hot at 3%. These rate cuts should happen, though. I will say that. They should happen because the rate cuts were never going to cause inflation in the first place, and lowering interest rates was never going to be the problem here anyway, because the inflation is not caused by the rate market, as most tenured economists would tell you. The inflation is not caused by the rate market. The inflation is caused by the expansion of the M2 money supply, which is done directly from the banking system. And so when you see that taking place, you have the Fed over here trying to distract you with quantitative easing versus tightening and then rate cuts versus no rate cuts. That was never the issue in the first place. Now, quantitative easing and tightening, that does have a direct impact on inflation. That is absolutely true. The rate cuts, not so much. All that does, let me put it like this. Let's put it like this. Here's what a rate cut does. Here's what a rate hike does. It's like putting the brakes on a train. Theoretically, it slows it down a little bit, but you're putting just a little bit of braking power on a 10,000-ton locomotive. You're not going to stop that thing. The reason that it doesn't work, and the reason that rate cuts have a very minuscule impact on inflation, even though the Fed acts like they have a great impact on inflation, is very simply because the inflation is not being driven by the expansion of the labor market. It's not being driven by the expansion of the economy. It's being driven by the expansion of the M2 money supply, which is why I don't consider inflation to be CPI. This is called the core price, consumer price index. This is technically the official inflation rate. I don't look at this. I look at M2 money supply, M2 money growth. Now, let's back up. Let's do a little bit of a teaching. What is M2? What is M2 money? M2 has exploded. Ever since 2000, the amount of M2, and again, I'm about to define what M2 is. The amount of M2 in circulation has shot up from 4.6 trillion all the way up currently to 22 trillion. So that's roughly a 6x in the last 25 years. That means, based on dilution of your dollar, you have seen your dollar lose about 70% of its purchasing power. Wait a minute, Jeb. Inflation hadn't been quite... Well, because technological advancement has brought prices down. Don't you see? CPI does not factor in M2. It doesn't. Look at this. I'm about to blow your mind. Like, you're going to walk away and think, oh my gosh, I'm so glad I heard that. Inflation is 3%. M2 grows at 7%. Why aren't those the same number? Because technological advancement makes things cheaper year over year. They still get more expensive because of the M2 money supply growing and diluting your dollar. CPI is only one half of the equation. Sorry, CPI is the end of the equation. There's two inputs to it. It's not just inflation. There's also technological advancement bringing prices down. bringing increased efficiency, which means you should be seeing the prices of goods go down over time. And they do, except for the expansion of M2. I want to point something out. You see this chart, right? Got this chart? Yeah. Well, look at this line. Just look at this. Okay, 15 trillion. Now we're at 20. So first of all, a third of all the dollars ever created have been created in the last 5 years. So that's that. But I'm about to blow your mind again. So first I think I blew your mind by saying, why have prices not gone down with technological advancement? Why is CPI only 3% when M2 money growth is 7 to 10%? Well, because the other 5 to 8%, 5 to 4 to 7% is being taken by technological advancement, making things more efficient. That's why. Productivity is skyrocketed. Prices should have come down, but they didn't because of M2 money growth. Now, I'm about to blow your mind again. Look at this chart. Look at this chart. I'm about to prove to you that it is not just quantitative easing that causes the M2 money growth. Because what we're going to do here is we're going to go on over to our super charts. Here we go. We're going to go on over to USCBBS, United States Central Bank balance sheet. And what you're going to find is going to shock you and infuriate you. Just take a mental screenshot of this line. Just take a mental screenshot of it. What does that look like? What is produced with Bitcoin? Liquidity. You can't run an economy without sound money. That's why Bitcoin will be worth more than any other technological advancement in the history of mankind, because it denominates. It is the denominator. Do you know where the word denominate comes from? It comes from the word denominator. You have all human productivity denominated in a currency. You have to have two sides of the equation. Bitcoin seems like it isn't like it doesn't do anything because it was never intended to do anything. It was to facilitate all the other things that do things. The same way the dollar doesn't do anything. It's the denominator. It is what we denominate things in. Nom, from the root word that also brings us nominal, such as the nominal value, such as the price, right? It is the denominator. It is what we track the nominal value of whatever's in the numerator as. You have a boatload of apples. You have an orchard. They denominate how much that orchard is worth in dollars, or they denominate it in Bitcoin. Bitcoin is the denominator. Now, take this. Denominates what according to who? Denominates literally anything that's priced in it according to the according to the market. Supported by who? About 400 million people. Yeah, about 400 million people that have adopted Bitcoin. That's who. Yeah, the same way the dollar only has power because people have adopted it. We have this deep-rooted, and the reason I'm answering your question is because you're not a troll. It's a very good question. We have this deep-rooted psychological idea that the government has to be the one that produces the money. That's not true. God made the money. He made gold, right? God made cows. God made land. This is what money was before people came along and started making paper currencies. We just assumed that paper fiat currencies are a force of nature, and they're not. They're a creation. They're not. They're a creation. They're a man-made creation, right? And Bitcoin's a man-made creation too. I'm not saying that it's not, but we don't just believe in the dollar as if it's like God. I mean, the government wants us to think that it's God, but it's not. All right. So this line right here. Take a look at this line. Take a look at this line. This is the United States Central Bank balance sheet. This is the amount of quantitative easing that the Fed has done. Do you recognize that? Do you recognize that line? Do you see it? Do you see that line right here? I'm going to just kind of switch back and forth for a minute. See the line? You see the line? What does this mean? A couple of things we want to draw from that. Number one, it's the same line. That means that this track right here, the United States Central Bank balance sheet, is a major part of the way that liquidity is put into the market. The second thing I want to point out is that this line continues to the downside. This one doesn't. Why not? Well, because quantitative tightening held down M2 money growth for a few years there because they were rolling off the balance sheet so quickly in an attempt to bring inflation under control. But as you can see, ever since January of 2024, M2 has grown from 20,700 billion up to 22 trillion. But quantitative easing hasn't happened yet. Why not? Like, why is the M2 money chart growing when the balance sheet is not? Well, because it's not just the Federal Reserve that creates new money. What? I thought the Federal Reserve and the Treasury were the ones that created the money. The Treasury printed the money and they managed it and they managed all the bonds. And then the Fed over here manages the United States dollar. What gives? Wait a minute. You're telling me that other people can create money? Isn't the word for that counterfeiting? I don't understand, Jeb. How can other people besides the Treasury and besides the Fed make money? Well, again, let's just say, do I have my wallet in here? No. Let's just say you have a $100 bill. You take that $100 bill, you deposit in a bank. What does the bank do with that? Does that bank just put your $100 in a safe and just hold on to it for you for free? I mean, think about that. Banking fees are basically nothing. How do banks even make money? You ever thought about that? I mean, you just kind of think of them as like an institution that's just there to serve your good. You go and you put $1,000 into a checking account. So long as your checking account doesn't go below $100, then you don't have to pay the $5 fee. Do you really think banks have these big ivory towers because of non-sufficient fund charges? No. The way they make all of their money, 98% of their money, is that you give them $100 in a bank account, you deposit it. They take 95 of those dollars, loan them to the next guy. Now the next guy's got $95 in his bank account. Well, look at that. Now you just went from there being $100 in existence to $195 in existence. But wait a second, if both of you went to withdraw the money, there wouldn't be enough there. Okay, now you understand where the banking crisis came from 100 years ago. But the only reason the banking crisis happened 100 years ago is because the banks couldn't go borrow money from someone else. So instead of getting rid of the fractional reserve lending system, which caused the Great Depression, here's what the banks decided to do. They all got together on Jekyll Island, and they decided, we're going to create the Federal Reserve, and the Federal Reserve is going to loan money to the banks as a quote-unquote lender of last resort to prevent this kind of thing from ever happening again. Except the Fed doesn't actually have any money because they're not federal and they're not a reserve. They don't hold any money. They have no money. And they're not federal. They're not part of the government. When Bob and you both go to withdraw your $95 and $100 respectively, and the bank only has $100, what are they supposed to do? Here's what the bank does. The bank goes to the Federal Reserve and says, I don't have enough funds to make whole both of these customers that want to withdraw at the same time. And so if I don't get some help, I'm going to go belly up. I'm going to close the doors. And there's going to be a run on the bank. Everybody's going to withdraw. Everybody's going to go broke. You're going to have an economic crisis like you saw in the Great Depression. What do? Well, the Federal Reserve says, okay, here's what we'll do. We'll go ahead and give you money. We'll loan it to you at an interest rate. And the money that we gave you doesn't even exist. Because the Federal Reserve is the largest counterfeiting scheme in the history of the world. And they've taught their system as monetary policy, and what it is theft. Because where there was $100, the Federal Reserve stepped in and created $95 out of thin air, diluting the value of your $100 so that now it's only worth $50 because they just doubled, more or less, the supply of the currency. So you get handed the bill of inflation because the banks want to fractionally reserve lend all of your money, and if they don't have enough money to cover all of the withdrawals, then they just go borrow it from the Fed, and the Fed creates money, diluting the value of your currency. That, my friends, is how M2 grows. This is not a literal money printer. This is not the Treasury just running full steam ahead, printing $1 trillion every year. That's not what it is. This is the fractional reserve banking system devaluing your currency. This is what is driving inflation, 3% right here. Take M2 money growth. Let's see, M2 money growth percentage. This is actual inflation. This is actual inflation. Let's even see what the Fed says. Let's see. Does Fed have this data? You know what? We're not. Screw that. We're going to go to the... Let's look at M2. M2. M2 money stock. By the way, let's get a quick definition. What is M2? Let me give you a quick definition of what M2 is. M2 is a broad measure of a currency's money supply. It's part of M1, 2, and 3. There are 3 different definitions of money. That includes all M1 plus savings deposits, money market funds, and time deposits, such as certificates of deposit. So, for example, this means that you have savings deposits. This is talking about everything that's in a bank. So money held in savings accounts. So M1 is the most liquid form of all monies, including physical currency, demand deposits like checking accounts, and other highly liquid deposits. M2 includes savings accounts, time deposits such as CDs that you are able to withdraw after a certain amount of time, and money market funds. M2 is so important because the Federal Reserve and other economists track changes in M2 to understand economic trends. There's only one change in M2, by the way, and that's up. Like right after COVID, when they rolled off $4 trillion off the balance sheet, was probably the first time in, 70 years that you saw M2 actually shrink. All right. So, and by the way, let's just have a sniff test. Back over here in 1960, I don't know if you can see that. Yeah, you can see this. Back over here in 1960, there were $300 billion of M2. $300 billion. The entire world had $300 billion. That's what it was. Now it's almost 30 trillion. Did we really need to increase the M2 money supply by like 100x to lubricate the wheels of economic growth? Nope. Absolutely not. We did not. So let's get back to it. M2. Let's look at M2 growth. Month over month. M2. So we kind of understand that M2 is this, frankly, kind of spooky number that's just representative of fake money being created. Over the last 24 months, M2 has grown by 7.27%. That's quite significant. If you look here at October of 2024 to here, you're looking at 4%. And many years, it's actually significantly higher than that. If you take the last, let's look at the last 10 years. So back to October of 2025, you can see that M2 has grown by 84%, which means because of M2 money growth, you have witnessed an 84%, you've witnessed approximately a 40%, because you have to invert that over too. You've witnessed about a 40%, 40 to 45% reduction in your purchasing power just from the increase in the M2 money stock. This is why Bitcoin is exploding, and this is why Bitcoin's not going to stop anytime soon. It's because of that. Now, let's talk about something else. Let's talk about how this news of CPI changes things. How does this news of CPI change things? The way that this news changes things is that it is possible that the Federal Reserve will be a little bit more hawkish moving into next year, which means that we may see it takes slightly longer for us to see quantitative easing. It might take slightly longer for all the rate cuts to come in, because it's unlikely that the Federal Reserve is going to end up dropping inflation below. Is going to end up dropping interest rates below the inflation rate at 3%. It's relatively unlikely. And then from that point in time, even though it might be slightly less dovish, slightly more hawkish, you're still almost certainly going to see quantitative easing resume. And when QE resumes, that's when you're going to see a major acceleration in M2. Because remember, M2 is driven by two things. It's driven by fractional reserve lending, and it's also driven by quantitative easing. The only reason here that M2 money growth has only been 4% a year when it's normally like 7% a year, the only reason for that is because you've seen a massive amount of rolling off of the balance sheet, quantitative tightening. You understand? So the quantitative tightening is the only reason that M2 has not grown this much. We have seen, this line right here, we have seen quantitative tightening remove 24% of the supply. And you have still seen M2 grow at 4% a year. When you start to see quantitative easing come back, which it almost certainly will very quickly, when that occurs, you're going to see M2 accelerate dramatically. You're going to see it accelerate very much so dramatically. Right? I mean, for example, let's take 2019 here. This was not during the pandemic. This is before the pandemic. November of 18 to November of 19. 7%. You see that? 7% in a perfectly normal year. M2 money grew by 7% leading into the COVID-19 pandemic, right? Let's look back here. Let's look at 2016. From January of 2016 to January of 2017, M2 money grew by 6%. At the time, CPI was reporting 2%. You understand? Okay, let's look at 2017. 2017 here to 2018. 2017 to 2018, you can see M2 money stock grew by 4.74%. If you look at the CPI was running significantly cooler at 2%. The reason is because you take, let's just do the math here, you take M2, which is a negative, plus, I'm going to call it TA, but I don't mean technical analysis, I mean technological advancement, and you get CPI. In other words, it is technological advancement and increases in efficiency in the economy that keeps CPI lower than M2. And so what they want to do is they want to make you look at CPI because it's obviously going to be lower than M2 because technological advancement is bringing, helping to balance the equation. if you remove the technological advancement, because remember, technological advancement should not be used to skewer our perspective of inflation. Instead, it should be seen as a blessed gift which brings prosperity. Then we should be looking at M2. We should not be looking at CPI. I'm of the opinion, I'm of the very strong position that CPI is a very poor choice for inflation mechanics. Because what you would see, think about it for a second. In fact, we have to invert these. I apologize. It's plus M2 minus technical advancement. If you look at M2 minus technological advancement, if you say technological advancement should not be a part of this equation because technological advancement is supposed to be a gift. If you removed M2 money supply and you said we just want to look at technological advancement, let's say technological advancement brings down the prices. Let's do actual math. Let's say technological advancement and increases in efficiency bring down the price of goods by 3% per year. But let's say that M2 increases at 6% per year. Then you get, now this is overly simplistic, but you get 3% CPI. Do you notice that if CPI did not have M2 corrupting it, and the equation was just TA equals CPI, we wouldn't be having 3% CPI. We would just be having TA, technological advancement and economic efficiency. TAEF, TAFE. CPI would be negative 3% every year. In other words, prices would come down probably 3 to 5% per year. This is the greatest scam. This is the greatest financial Ponzi scheme in the history of the world. If this doesn't make your blood boil, because this should make you angry. This really should make you angry. If this does not make your blood boil, it should. The banking system is a cartel designed to keep you poor, and they have managed to convince 95% of the population that 2 to 3% inflation is absolutely critical for the economy to function. But just think about it with your brain for a second. We have gotten so much more capable of making cars, of making planes, of making television. Sometimes you sit here. Here's an example of what I'm talking about. I'll prove this to you. Let's look at cost of goods. Last 30 years by category. Televisions. Let's look at televisions. Televisions are like the perfect success story of becoming more affordable over time, right? Televisions are now like 90% cheaper than they were in 1998. The reason for that is because the technological advancement in TVs was significantly higher than M2 money growth was slowing down the increase in the cost. So M2 is a negative 7% per year drain on the value. In other words, because M2 is negative 7%, the nominal price has to go up by 7% per year. But because of technological advancement, cost of televisions went down on a real sense by probably 20% per year. So M2, we're seeing 7% per year. 20 minus 7, let's just call it 20. And then because this number is smaller, M2 money growth is still smaller, then you see the price of televisions go down year over year by 13%. But if you actually look at the price of a television today versus the price of a television sorry, I wasn't showing that. If you look at the price of a television today versus the price of a television in 1998, you'll see that they're actually significantly, even more so cheaper today than they were then. But M2 has robbed you of those savings. All right, let's go ahead and read some chat. Really appreciate all of you guys for being here. By the way, if you have not already, make sure to check out Stamp Seed. Big shout out to them. Stamp your seed phrases on titanium. It's definitely going to help you keep everything safe. Josue Rizzo, what is your chief concern? What's your chief concern here? Like, where am I wrong? I love it. Tell me. I love a debate. Where are we wrong? Where are we wrong? Who else is down 40% with their Bitcoin treasuries? Yeah, I just buy Bitcoin. I do own a little bit of MicroStrategy as an experiment. So far, I'm not that pleased with the experiment. I love Saylor. I met Saylor. And MicroStrategy probably will end up performing very well. But it's going to take time. It's going to take some time. It's going to take some time. We broke this parabolic uptrend here, and so it's resetting back down to baseline. At least the banking system has a military behind it. That's why the banking system has succeeded, because it dominates. It literally, and you said it best. The banking system has a military behind it. Use our system or we'll kill you. Yeah, that sounds very capitalistic, doesn't it? That sounds incredibly capitalistic. That sounds like a free nation, doesn't it? You need not be confused. We do not live in a capitalistic nation anymore. We live in some random, strange mashup of communism and capitalism. There are some capitalistic elements, but it's not. It's not a full-blown capitalistic nation like it's supposed to be and like it used to be. I really want to make you understand, prices going up every single year is not normal. It's not normal. And by the way, this works on the inverse. If you have M2 growing at 7% a year, then that means whatever your interest rate is on an investment has to beat 7% to keep up with it. You understand? Like, let's just, M2 money stock. Let's just pull a number here. M2 money stock in January of 09, 4.61. Compound interest calculator. So we need to get from where from 4.61 to, we got 25 years, and we need to get to 7%. And we got 25 years, compound monthly. Look at that number. There it is right there. It's been 25 years. Well, let's put in 6.66. Let's just see if that's the number. Okay, yeah. 2.24. We're calculating the growth rate here. M2 money stock is at 22.2 trillion. So let's continue to adjust the interest rate here, respectively. Kind of freaky how close that number is to 6.66, isn't it? Kind of freaky. Just putting that out there. Some of you will call me a conspiracy theorist. That's fine. I don't really care. It's been 25 years. In fact, let's correct that. It's been 26 years. So yeah, M2 money growth has averaged approximately, let's look at 6, approximately 6.2%. Yeah, did I get that right? Nope, sorry, not that. M2 money growth has averaged, because remember, let's pull our numbers here. January 1st of 2000. January 1st of 2000. What was the M2 money supply at? 4.61 trillion. You see that? See that? Currently it's 22.2. It's been 26 years since that date. You have to have a 6.2% interest rate to get there. Okay? So that means whatever your investment is, you have to make 6.2% every single year on average for the totality of this century to keep up with inflation. If you run this further back, it gets even higher. You have to make at least 6.2% every single year to beat inflation. Now, let's take the stock market. Let's see how the stock market has done in this case. Let's look at how much the stock market has grown since 2000. This is really going to tick you off when you see this. Stock market. Let's find January 1st. January 1st of 2000. Y2K happens. SPY is at 145 points. SPY is at 145 points. At 145. If SPY grows at 6.2% per year, which is 0% because that's just taking out M2 money growth, then SPY should be at 723. SPY is at 676. Okay, so let's figure out what the inflation rate has been, what the interest rate on SPY has been. 6%? Not quite. 5.9? There we go. That's our current. Like I said, this is really going to piss you off, and you should be. 676, 667, 669. We can say that's pretty similar. So, since the beginning of the century, since the beginning of the millennium, SPY has averaged 6%. But remember, do you remember? You have to take M2, which we calculated 6.6. That is a negative. And you have to add it to the growth rate of the asset. As you can see here, we calculated at 5.2, 5.9. That equals, you have averaged in the stock market, when you calculate it based against M2, then you get a growth rate from the SPY, the S&P 500, where you have all of your retirement funds, at negative 0.3%. Even with the parabolic upswing, you have lost money in the S&P 500. I wonder, I've never looked at this, but I wonder, are you able to pull up, it wouldn't surprise me if this wasn't possible, are you able to pull up stock market over M2? I wonder if we're able to do that. Let's see if we can actually get a good chart of this. I'm not sure if we can. Look at that. That's hilarious. That is hilarious. It looks like we can. Stock market divided by M2 money supply. What we've done here is that they have given us, what is that, the SPY, I guess it is, against M2 money supply. So let's go look at this. Let's see if our calculation was correct. In January, SPY was 283. You then divide that by M2 money growth, and you can see now it's at 291. So in other words, in 25 years, according to this chart, when you value the stock market against M2 money growth, what you will see, is that you have made exactly zilch in stocks. You've made exactly zilch. Here's the kicker. Here's the kicker. You want the kicker? You want to know why I love Bitcoin so much? Here's the kicker. When you sell those stocks that against the dollar that is being debased, when you sell those stocks that against the dollar are being debased, and you see that you've made a 362% profit, here's what you're going to need to do. You're going to need to take 15% of that and pay that to Uncle Sam. So this is just what the market did. It doesn't take into account the fact that you had to pay taxes before you invested, and you had to pay tax after you invested. The entire stock market is a complete and total scam. It is a complete scam. Do you understand why I don't talk about stocks very much? That's why. The idea of investing in the index, you're lucky if you keep up with M2 money growth. You're lucky. Drill this into your skull. This should piss you off. This is ridiculous. The entire stock market is a scam because of what the Fed has done to our currency. Not if you have a Roth. Yeah, if you don't have a Roth, then you'll get your money out the exact same value that you had it back in the 90s when you invested it. Hey, I mean, the stock market will help you to not get eaten by inflation. You'll tread water, but you're not making money. Now, let's run the calculation on Bitcoin. Let's take as much data as we can here. Let's let's call it 10 years. Let's look at the last 10 years of growth. Over the last 10 years. Unregulated crypto is solid. Yes, because that's what we need more of, is government regulation. Because they've clearly done such a good job with the currency. Obviously, we should trust the government with the currency when the government and the banks are debasing the currency faster than the growth rate of your investments. I mean, seriously. Okay, let's take the growth rate of Bitcoin because results speak louder than words. Over the last 10 years, Bitcoin is up 40,000%. All right. Let's say, hey, Jeb, diminishing returns. Boom, smack me upside the head. You got me on that one. Okay, let's call it 4,000%. Let's decrease this number by a factor of 10, by an order of magnitude. Let's call it 4,000%. What interest rate do we need to get from $100 to $4,000, which would be a 4,000% return in 10 years? Right? I have that right? 4,000%? 4,000%? 100 times 4,000%. Just making sure I got that right. Yes, it'd be 4,000, duh, because it's times 100. Yeah. Okay, so what growth rate do we need to get $4,000? Over the last 10 years, Bitcoin has averaged, if you cut its growth rate by 10, by a factor of 10, because remember, the growth rate is actually up to, we should be turning, that breaks the calculator. Remember, you'd be looking at $40,000, the actual growth rate. You'd be turning $100 into $40,000 in Bitcoin over the last 10 years. So the growth rate has actually been somewhere around 62% CAGR, right? Somewhere around 62% CAGR. Again, let's cut that in half. Let's say our target is not 40,000, it's 4,000. Let's say that Bitcoin grows a tenth as fast as it does in the last 10 years in the next 10 years. Then you're looking at a 38% return against dollars. Now, we got to plug this into our calculation. M2 is negative 6.2%. Let's say M2 in the equation is negative 6.2 plus the growth rate of the asset, as we can see over here. We have to let's say if it grows a tenth as fast as it did in the last 10 years in the next 10 years, you're looking at 38%. I think that's a fair assumption. I think that's pretty conservative. Then that growth rate would be 38%. And when you subtract, then you'd be looking at 31.8. 31.8% after M2 inflation. Do you want, after you subtract the necessary M2 debasement, negative 0.3% growth? Or do you want this? And by the way, this is 1/10 of what we did in the last decade. If we just did 1/10 of what we did in the last decade, in the next decade. By the way, if you take a 38% average growth rate, I don't even think it's going to be that high. I think it's going to be lower than that. If you put $1,000 in and $1,000 a month, you'd have $1 million in 10 years. Now, I'm not sure that we're going to do that again because that is genuinely just absolutely parabolic. If you put in today's price at that growth rate and you give it 10 years, then I would say in 10 years, Bitcoin's trading at $4.6 million a coin. I'm not convinced it's going to go that high. I'm really not. I'm not convinced it's going to go that high. I'm not convinced it's going to go that high. So let's even say that this is 25%. Okay, in 10 years, could we see Bitcoin being at $1.3 million a coin? Yeah, absolutely. I honestly think that you could probably see like 28% growth. $1.7 million a coin. Okay, take 28 minus 6.2, you're looking at a 20.8%. 21.8% growth factor. In real terms, then, we subtract 6.2, so 21.8. In real terms, then, Bitcoin's trading at $1 million in 10 years. Even when you remove the debasement of the currency. So that's where, in my opinion, makes it very simple as to why I don't invest more in the stock market. Because the stock market doesn't grow against M2. It just doesn't. It just doesn't grow against M2. By the way, stock market crashes when quantitative tightening comes. This crash right here in 2022 was almost entirely driven by the money stock going down. And so the stocks are going to fly. Let's do one more thing. Let's look at gold. Everybody talks about gold, right? I mean, gold is great. I love gold. Let's talk about gold. So gold. From 2000. January 1st. To now, 1,300%. Let's calculate the growth rate of that. So if we take $100 and we want to get to $1,300, then we're probably going to need like, what, 14%? we're going to need more than that. How about that? 20%. No, we're going to need more than that. Nice. Oh, I'm sorry. This is over 26 years. 14%. Not quite. 11%. Maybe. Let's pull that number again. 1,300. 1,300. 1,300. All right, it works out. So, 10. So let's take our math over here. Let's go back to SPY. Go back to SPY. And we add in M2. We calculated it. Negative 6.2. Plus the growth rate of the asset. GLD. 10 equals an actual growth rate of 3.8%. On average, after you account for M2, you've made 3.8% investing in gold. Better than the stock market. Yet everybody hates on the gold bugs. I prefer Bitcoin, but gold does better. I mean, bottom line. Let's do one more thing. Gold over M2. Let me see if I can find this chart. Let's see if we can find this chart to check our work. Gold's price over M2. Gold ratio. Wow. Let's see. Yep. If we divide the price of gold by M2 money supply, we get the gold over M2 ratio. This ratio shows us the value of 1 ounce of gold relative to M2 money supply. When the ratio is low, gold is undervalued relative to M2 and vice versa. So this is the chart right here. As you can see, gold is basically held steady. In general, what you're looking at here is that most investments are not actually making you money. By the way, think about this. Let's just finish putting the tinfoil hat on. By the way, this is all proven. I mean, this is evidence-based. You can say what you want, but all this is, these are the charts, these are the numbers, this is the official data that they give you. They just don't put it together for you like I am. It's very disappointing. This basically means that most of what we would consider to be investments are scams and they don't actually make any money. And guess who? Guess who? Think about this. Guess who sells you investment products? Who runs Wall Street? The investment what? Say it with me. Investment banks. Investment banks. Why do all of the assets go up 7-10% a year? Because the money supply goes down 7% a year. The value of your money goes down 7% a year. Here's what actually constitutes an investment, because gold and the stock market are savings technology. They will stop your wealth from being debased, which is better than nothing. But you're not actually growing your net worth because of them. So what is an investment? An investment is what I'm doing on this channel. I'm running a business. I'm running a business, which revenue doubled in the last year. That far outstrips M2. An investment, in my opinion, then, is anything that has a historical track record of beating M2 money growth. If you can beat M2, you are now in the classification of investment. If you do not beat M2, you are not in the classification of an investment. This is why, in general, I have a few investments. I invest in Bitcoin, but yeah, Bitcoin is just savings technology. Has it outpaced M2? It has outpaced M2. So at least for the history, it has been an investment. It will eventually be savings technology. Eventually, its chart over M2 will look like this. But it's still going through mass adoption right now. Eventually, Bitcoin will just be savings technology. We're not there yet. What is an investment? A business that generates income that grows faster than 7%. So I really want to encourage you guys to figure out how to do something that grows your income by 7% or more per year, because you are losing 7% of your wealth every single year to the Federal Reserve and to the banking system, which set up M2. It is, plain and simply, and I want to be crystal clear on this, I want there to be no confusion, it is a demonic, satanic industry that is designed to steal, kill, and destroy. Steal your wealth, kill your future, and destroy your economic prosperity. The current banking system of fractional reserve lending and the Federal Reserve is of the devil. Bottom line. There is no way around it. It's that simple. Now, considering that our banking system is satanic and it is demonic and it is evil and intended to destroy your family, it is imperative that since the entire world has sold you this farce of the Federal Reserve and of the banking system, that we do something about it. So we need to go be productive members of society, and apparently our hurdle rate is not just anything better than 0, our hurdle rate is anything better than 7%. Figure out some way to make your net worth grow more than 7% a year. Because 7% is actually 0%. Because if you grow 7% and inflation drops you by 7%, you lost 7%. It's absolutely disgusting. It's horrendous. Let's read a little bit of chat and then we'll wrap it out. Guys, if you want to join our Discord server where you can learn a lot more about Bitcoin and cryptocurrencies, I highly encourage you to check out the exchange 2bit. Hey guys, I love 2bit. This is where I do all my trading. When I'm doing my trades, this is where I plug all my trades in over here on 2bit. So if you guys haven't already, make sure to sign up for 2bit. Get started with your trading journey. We're doing a lot of work over here with trading. We're doing a lot of work over here in the Discord server. So there's a lot going on. If you've not already, make sure to sign up for 2bit. Deposit $100, and then you'll get access to the Discord server for free for a year. Just send an email to malachipats@cryptojeb.com and you will see exactly how to do that. Let's read a little bit of chat and then we'll wrap it out. The SPY's a joke. NASDAQ is better. Both of them are barely beating M2 money growth. Likely Bitcoin will be upgraded to SHA-3 as it's even more secure than SHA-512. Yes, and this is something I'm going to say on probably every single piece of content from now on. Developers need to do something about quantum resistance. It has to happen. We have to get quantum resistance. We have to get quantum resistance. We have to get quantum resistance. Bitcoin is one of the greatest pieces of financial technology ever conceived in the history of mankind. It is absolutely essential. Absolutely essential. Absolutely essential that we do something about quantum. Why do you have so much faith in government that is clearly abused? That's true. Thought inflation is 14%, I'm relieved. No, I mean, we just calculated M2. It's 6.2% so far this century. No, luckily it's not 14%. They could make it 14%. That's some hyperinflation. You basically need 15% gain per year to be keeping up with the Joneses. Yeah, more or less, if you want to actually grow. Yeah. Bitcoin only has 21 mil. Gold can apparently still be dug up. Yep. Stock market is flat against M2. Yep. Stock market's a total scam. The real value of gold is its scarcity, which is why it's actually done somewhat decently against M2. But it's, I mean, still, it's again, it's savings technology. You have to subtract M2 money growth from any inflation, from any interest rate that you're getting on any investment to get the actual return. Industrial inflation has been about 30%. My concern is that the whole crypto industry is a Ponzi scheme. I mean, so that, I don't think it is. I think there's plenty of them in there. But I mean, for me, I most of what I do in Bitcoin. That's it. That's what I do. That's what I do. There's a lot of value in DeFi also. As much influence and control that we can take away from the banking system, the better. See. Just reading some chat here before we wrap it out. Would more regulation solve our problems? I'm going to go with no. I'm going to go with no. Even if Jeb changes his mind, he's a good man, has good advice. We do our best. Let's see. We had over 150 years of an average 5% growth with 0.5% deflation during the start of this country. Exactly. Inflation is a scam. And our forefathers are at fault for allowing it to take hold. The Federal Reserve was one of the worst things that ever happened to the United States of America. Is it easy to put crypto in a hard wallet? It is, but if you do it wrong, you'll lose it. So you do have to be very careful. It is pretty easy. Bitcoin will be fine. Just hang on, people. Remember when hitting 100K was a big deal. Yep. All right, let's see if there's any more chat down here. Tom Crown in chat. What's up, Tom? Good to see you, man. You're right there competing with the price of Bitcoin, aren't you? I think you just hit 100K. Who gets to $1 million first? Tom Crown or Bitcoin? Who gets to Bitcoin? Who gets to $1 million first? My man Crown. 109. Oh, he's at 191K. Wow, dude. Jeez. Took off like crazy. Good for you. Jeez. Good deal. Jeb, what if Satoshi is the CIA? I very much don't believe that's the case. If it is, we're genuinely just screwed. This is why you need Jesus, because this world is, I mean, it's a dumpster fire. The world is a complete and total dumpster fire. It really is. Complete and total freaking dumpster fire. I look forward to the day where I'm not a part of it anymore, where I just go to be with God, where it's all perfect, and I don't have to deal with it anymore. It's a complete joke. This information is normally only found on right-wing communities, far right. Yeah, I'm not far right or anything, but what I will tell you is that the banking system is a complete and total scam. And it's so sad because 95% of people think it's real. 95% of people don't see it. They got the blinders on. This is the moment the red pill happens. You're like, you're telling me that the stock market has done nothing in 25 years? This chart right here is enough to send a shiver down your bones. Because what happens? Here's what happens. You have two levels of financial education. Either one, you get the financial education of a preschooler, and then all you do is you work and you eat, and then you go back to work, and then you eat some more, and then you die. And then the next level, the phase 2 of financial education is, oh, okay, invest 15% of your household income into the stock market. That is a bastardization of the word invest. Why would we dare use the word invest when this is what the United States stock market has done over M2? That's the US S&P 500 over M2 so far this century. That ought to make the entire world apoplectic. This is horrendous. It's completely ridiculous. Completely and totally ridiculous. Hopefully the aliens are here in a couple of weeks and it's all over, because I'm done working and investing as all that's available as scams. Yeah. Crypto is the US dollar 2.0 and worse. Nah. Tom Crown, herp the derp, sir. What happened? Why so down? I'm not down. I'm just giving you the use case for Bitcoin, because when you look at Bitcoin, let's see if I can find a Bitcoin BTC over M2 chart. See if I can find Bitcoin. See if I can find this chart. I think this is it. Is this it? Let's see. No, this isn't the chart I'm looking for. This is the chart of everybody saying that M2 front runs Bitcoin, isn't it? No, this isn't what I'm looking for. See if I can find this. Here, New Hedge might have it. Is this it? No. Yeah, having a hard time finding it. Bitbo charts? I am indeed not a robot, don't worry. Bad request. Of course. Oh, well. Anyway. Day 1 of asking for Ben Cohen collab. I'd love to meet with Ben Cohen. Anybody knows Ben Cohen, definitely give him a shout out. I'd love to. Buy Bitcoin. Number 1, buy Bitcoin. Number 2, buy Bitcoin. Number 3, buy Bitcoin. I hope you guys have enjoyed today's stream. I know it's been a bit of a downer, but here's the deal. You can either keep the blinders on. You can either keep the blinders on and you can learn and you can just continue on about your business getting screwed. Or you can pull the blinders off and you can wake up to the way the world really is and you can do something about it. That's what we're here to do, is to help you do something about it. So I highly encourage you, if you have not already, make sure to hit that like button, subscribe to the channel, and stay tuned for more content. I love you very much. Don't buy the bull crap coming from the Fed. At the end of the day, I want to end on this. There is a king who is perfect. His name is Jesus. He is coming. He is currently sitting on the right hand of the Father. He is Lord over all creation. He is completely and totally in charge. For some reason, he has allowed all of these things to take place for a time, such that he would not hewn down the harvest with the chaff. God has decided in his infinite mercy to allow this broken, corrupt, and evil world to continue for as long as he wants, so that as many of us as possible can accept the Lord Jesus. Because if he had ended the world 10 years ago, I'd be in hell right now. So thank you, God, that you've given enough time for the people listening to me to give their life to you. But there is coming a day of judgment. There is coming a day when where the sinner and the evil that do not submit themselves to Christ will be held to account. I could not pass that judgment because I am an evil man outside of Christ. Give your life to the Lord Jesus. Give your life to the Lord Jesus, because if you don't, then you will be hewn down along with all the other evil. You need to give your life to Jesus. He loves you. He cares for you. He died for you. And there is a promised world that isn't like this, because this is so disgusting. Just think about it. We all have an inner sense of understanding of what's beautiful and what's ugly. What I just showed you about what the banking system has done to your currency is ugly. It's disgusting. It makes you want to vomit. You can tell in your core that that's evil, and whatever's the opposite of that must be good. Jesus did not come that we would be debt slaves or wage slaves or in financial bondage to a banking system that has taken over the world. Jesus came that we would be free. And in the new heavens and the new earth, and in eternity, we will be free from this kind of evil. I highly, highly, highly encourage you, above all else, to give your life to Jesus. I really appreciate all of you for being here. If you have not given your life to the Lord Jesus, please do so. Please do so. Please, please, please do so. We'll look at the charts one more time before we wrap it out. Bitcoin, as we talked about, during the stream, actually, while we were talking, it dropped down here to the exact level we said it would. 110,000. It's currently bouncing, and it'll probably continue up from here. I love you guys. I love you so much. I appreciate you being here. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.